Everybody, great to have you back for our swing trading class. My name is Mike Fairborn, Senior Manager Trading Derivatives at Charles Schwab. Folks, today I did want to take a look at some low beta breakouts in terms of swing trading so that we can try to do what we can in this volatile market environment to kind of help us with some of these price patterns and general setups with the swing by just reducing some of that beta out of the move. So a specific setup that we would normally look at, but yeah, we definitely want to take a look at building a scan today to help us in these current market conditions, to help us along those lines. And so with that, welcome to each of you here. Good to see you in the chat. Hello to you, Thea, Jay Richardson, 2308. Get all these numbers at the end, but yeah, hello to you, Michael, Thea, I said Thea, ready, Zeno, we've got Wiley Coy, Scott, John, and Jonathan, JV Texan, how's it going? Will, as well as Olga and Kevin. Welcome to all of you. I'm also joined in the chat by a good friend and colleague of mine that we've worked together for at least coming on 20 years. Ben used to be on my old team years ago as well. It's great to have Ben Watson here. He's doing much more than just what he was back then. He's out on the road. Encourage you to take a look at some of those live events if he's in your neck of the woods. But folks, you can follow us both on X. Ben Watson CS. I believe it's Ben Watson, not Benjamin Watson, but it's Ben Watson CS. Mine is just Mike Fairborn CS. And with that, let's get going here with some disclosures real quick. All right. Information here, material is intended for general informational and educational purposes only. Now, a paper money software application is provided for educational purposes only as well. Investing does involve risk, including loss of principal, and for some products and strategies, loss of more than your initial investment. Now, there's no guarantee that the execution of a stop order will be at or near the stop price. Well, we'll be looking at that today. In addition, past performance is no guarantee of future results. Dividends, folks, dividends, well, they're not guaranteed. They can be cut at any time. Some traders will look at those that have extended history of raising dividends, but nonetheless, they are not guaranteed. Some additional notes here. Just with futures, just wanted to state that we do look at futures, and we will do that from the get-go a little bit. Futures and futures options trading does involve substantial risk, not suitable for all investors, but we are just looking at charts here. We do have other classes that will look specifically at futures, trading futures, and futures kind of strategy examples. But this class, we're just sticking to the charts. And with that, good welcome to all of you just joining us. All right, let's get going. Okay, well, actually, this is this is our chart from markets and sectors with the omen down below. 1 second, I'll flip to the other one, the standard one that we oftentimes will just take a look at. We'll go full screen here as well. In fact, actually, before I go full screen, well, we'll look at futures here in just a second. But wanted to highlight just a couple of setups, just as we're looking at the markets right now. Now, I did send out a tweet on this earlier in the week, and all I was really doing, folks, was just coming down here and saying, right here, that sunset was actually kind of blinding. There we go. Right there, just the S&P 500 approaching the 20-day moving average. Will the market find support here this week? Sometimes it does. In fact, you'll get a fair number, not in every case, but you will get some traders and a lot of times technicians. It can even be, you can actually see with that, I would say, well, you would get like institutions sometimes that would be maybe, that's one of the moving averages that they really will focus in on. And we did actually, if you look where we're at here, we did actually kind of bounce a little bit a couple of days. I could always just put it on here. Why don't I just do that? Yeah. So easy to do. Just pull it right up. I've got them saved in here, right? So we'll just throw this guy on, show the plot on, and it'll be a green moving average. There you go. We came very close to it. And sometimes these can be interesting. Now you'll also see sometimes the 40-period week moving average come very, very, very close to the 200-day. They are a little bit different, and you see different sort of indications on a weekly. I'm just going to throw it out there since I mentioned it. We'll zoom in. That's kind of a longer-term chart, but just throw a 40, just like you do a 40-day moving average. Come over here and just throw on a 40-week moving average. Let me get some color to that as well. 40, yeah, show it. This is just going to be a week because we are on a week here. There you go. Do you see that as well? This gives you a little bit of perspective too, where you can actually kind of see, yeah, there are some big turning points that can occur around that that 40 week. Look at that. I mean, that was a long run. This too, once we got back up above this level, it was, I mean, these are months, these are quarters over here, quarter, 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 quarter going by, I guess you could say. Over here, it was almost like a year. I guess it was technically a year. There's October down here to October. And what would you say? Why am I doing this? Well, one of the things I would say is that if you can have a defined upward trend that you can recognize on the chart, you could see it on the chart, and it's strong on a weekly basis, folks, could that also be useful for us? Maybe on the shorter term swing trades that we might pick up on the daily chart? The answer to that is absolutely. If it's going up on a weekly chart, we might have a fair number. And we're just looking at some over here with the kind of, this is kind of our estimation of that 40 crossover here. We're just kind of still seeing it though. But how many little pullbacks did we have here that broke out? Flag patterns, flag, 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 quite a few. So kind of getting that big picture scenario in there can also be helpful too. And why are we talking about that? Well, because we're right back at it here. Will we get a bounce that resumes with the trend here? Supposedly with the economy, at least in terms of what current administration is saying, 2026 could be a strong year. Of course, it's a little bit muddled now with war efforts and things, but we'll just see how that unfolds. But 2026, we are in 2026, even says so right there. So will it bounce? Will we see something here? Or are we just going to fade again and break it? Because if you break it, I mean, here's just a case in point too. It's just a change, a big turning point potential. Dip right there, recovery back up. You know, it did recover, but I mean, still, that was kind of a strong dip below that 200 as well. I mean, let's just do a percentage. Just wow, that's the market here. I'm just going to go low to high to low. That's 16%. That happened, folks, over 8 bars. 8 bars. Okay. That, or 11 calendar days. That's a big move in the market. Case in point, yeah, the 200-day is interesting, up or down. So what we kind of do is when we see that 200 setting up, as we look at it, it's kind of a swing trade. Because if the S&P's going, is strong, it could be a risk-on scenario for a number of different stocks. We automatically shift and say, well, okay, well, how's the trend doing over here? It's kind of down. But if you start to get higher highs and higher lows, well, maybe that changes. Now over here, that's not what we saw. We got a lower low and a lower high, and bam, actually that second lower high, well, that was the real bam right there. I mean, that was just, oof, that's brutal. But I mean, it did bounce back. So, but there you have it. That was tariff related, I believe is what that was. That was kind of a wild ride in the markets. But anyways, that's a look at the markets. Now we have to look at the NDX real quick, because we can also see here too that the 200-day is sitting right there. Now, what is interesting is sometimes when stocks touch that moving average, they might have a tendency to I'm not going to just bounce. Okay. Over here, look at this bounce over here. Look at the break. Bounce or break. That's a gap above. We touched it right here. We shot up. We touched it again. We shot up. But are we going to really shoot up? And remember, keep in mind that 2,500 level is interesting too. Now, we have to state this, because it's been quite volatile. Here's the VIX. The VIX is still up. I mean, we are above. I mean, just yesterday we were above 25. And one of the things we could see is the possibility of a higher low. Now, I'm just going to draw this because we drew this exactly last week and we came right back to where we are, right here. And what did we do over that time frame? Because look at this. Oh, hang on. We're shooting up again. There we go, straight across. See that? A lot of touch points through here, through here, and here, close to here, definitely here, and here. We're right there again. Will we see a bounce or will we see a break? The bottom line is volatility, VIX volatility is high right now. It is high. It is high. And we can do this too. You know what's even higher? So we're at 22. Here is a big symbol. For some reason, I couldn't get the VXN, which is normally just, if I go with VXN, NASDAQ volatility, it's not coming up anymore. So I had to go in and pull up this one, which is a little bit different, but it is still the volatility as of today. If you look at it, wow, for the NASDAQ, that's right. You're seeing that right. That's just under 30 in my book, right? Or 29.80. Oh, is this the 13th? Okay, 16th. Why do I get the 17th? That's interesting. I don't know. We still just have the, hang on a second. No, I don't know what's up with that. Maybe I'm missing a bar here too, but it was really quite high. Anyways, folks, volatility's high, and that's something to be mindful of. When the volatility is high, interesting things can happen. And it can be tricky when we're looking at the swing trades. And that's why we're going to have this discussion today. In fact, let's look at some of the companies in the S&P 500. Here is Goldman Sachs, which, by the way, is right down to its 200-day moving average. But I want to replay kind of a scenario over here as we have been creeping up on a higher VIX. And just as a scenario, this can tend to happen sometimes. Like, say, for example, we're looking at a long upward trend over here. And we're saying, well, this stock has had a tendency, just kind of looking at, and by the way, as you look at back past results, of course, they can change going forward, but we're going to actually explore that specifically today. Underlying trend, basically the upside, right? And sometimes when you get the sideways channel, you get the break, a little bit of a move. Yeah, you're looking for a bounce to come up here. Now, this is kind of an extended pullback, but some traders might have been seeing that right there. We can see on that particular bar at the close, that was the close above the high of the low day, a hold right there. Now let's just inch through this, and I want to talk. So there's a little bit of follow through day, right? 950. Okay, you're saying, okay, it's kind of bouncing with the trend. We've got the hold. Now we've got a follow through day after the hold. I think something that, a lot of traders will even look at as the next follow through day. You see it again, and you're saying, okay, well, there's a little bit of resistance here, but that's kind of normal. Let's just see if we get another move. It's not unusual to get some of these sort of reverse or sideways days at a resistance level, and you see it again one more day, and you say, okay, we're still seeing the same thing, but I had a strong bounce over here. I'm still, technically I closed a little bit, I traded a little bit higher over here than even this high. So we are showing signs, and I'm just waiting for an indication of a bounce to the upside. Does that make sense? We're just looking at a break going higher right there. So we're seeing if prices can break and jump up here. And then what we're going to do is we're going to go one more day, and we're going to say, oh, wow, what happened? On this particular day right here, we literally went from that high to that low. I got to zoom over here just to kind of show you what happened. But I mean, this is just what volatility, a volatile market can look like right now. It can be crazy. From the high to the low, just on that single bar. Oh, good. We got the percentages there. No, we don't. We had the price move. If you're just looking at that, folks, that was, oh, there you go, 666%. Well, okay. I didn't know I'd see that number, but that's a big, big number right there. It's a big number. On one day, that's down $64 in one day. If I'm just using the opening to the bottom here, that's almost, it's about 5.5% from the opening, a little bit more from the top on down, right? But huge day, volatile. And that's really, really difficult to kind of track as you go through here. Now, I'm going to add to this. There are ways to help balance out that volatility because, folks, if we're in a trade like this on a swing trade, some people like to watch their trades, but if you come back and you say, what, we're down approximately 64 points on the day, on one day, that makes for very, very volatile swing trading. And it makes it tough to get out if it's breaking down. We don't have much time. In fact, it all happened in one day, basically. It broke through here. It basically encompassed or engulfed 1, 2, 3 days, 4 days, it looks like, close to 4 days in there, a bearish engulfing bar. That's difficult to deal with. What we need to do actually is take swing trading to a different level during volatile market conditions because some of these have just been moving way too quick. And we're going to note this going forward when we're above that 25 VIX or in that range or definitely trading above 20. We've got to keep eyes on this because one of the issues that we're going to face is these quick stop outs, perhaps. So one other element I wanted to note is the beta, right? The beta over here. Look at that. I mean, this is already, not only is the VIX high, but compared to the market, the S&P 500, the SPX, we've got a VIX of one, excuse me. Yeah, a VIX of one. I'm sorry, a beta of one, beta. Mine's still in that. Okay, so beta of one, which represents volatility over different ranges. So not only is the market high right now, let's just say if it's somewhere in the 25 range, oops, let's just change that real quick. Somewhere in the 25 range, we've got one other factor to deal with, and that is the beta. And we're like 1.3 times higher, 30% higher than the market even in terms of the beta. So we need to kind of adjust this and be looking at companies that aren't so prone to these massive moves because we're focused in on whatever price pattern it is, but it's that swing trade that we're looking to take to the upside. But if you've got crazy volatility and it just so happens to be like one of these, like that Goldman trade was, it just goes like this. It can just go snap back, and of course, you can have stops in place and other things too. But if it moves very, very fast, remember what we said about that stop order is not guaranteed to fill at that price, especially a fast-moving market. Things can blow right through there, right? So we see that in stocks like GS. We see it in Meta as well. Like, for example, here's Meta. Okay, 1.2, almost 27% above that level. And you see this over here too. This was fascinating. This was a good earnings announcement right there. I mean, the market responded well, but look at that. Just in over a series of like 3-4 days, you've already closed that gap and you were just on your way towards lower lows and lower highs. Very, very fast. So we're talking about two things here. We're looking at this environment right now is the VIX plus beta. And if we can find a way to balance out that beta, we can just be in a better position, right? To potentially, with a lower beta, it's just it could create a slower, more methodical move to the downside if it's going against us. And in that case, it could provide us with a better opportunity to exit, if it is going against us too. And by the way, sometimes when you tap into those low betas, you're just looking at the slow and steady movers to the upside. So without further ado, let's just tap right into the scan right now and just start building this guy up. Now, I am in the scan tab right here, and I'm in the stock hacker as well. We're looking at the S&P 500, but we're going to add to this a little bit. We're going to start off actually with the beta first. So simple and easy to do. We're just going to add the filter over here. Just go under stock. And then as we come over here, let's just throw that beta in. And let's see, what do we have here for the beta? If I click in, wow, look at that. Look at the upper range. That is crazy. So we have at least a company out there that is in the 3. So the market's 1. Forget the VIX being high. That account that adds to it too, but that's a 3.42. 3.42. So like you're looking at a percent change in the S&P 500, a percent change. This is changing like, just as an explanation, a 1% change on the S&P 500, you're looking at a 3.4% change for every one change on the S&P. Massive, right? Up or down. I mean, those are really, really hard. And this is just all in the S&P 500. Let's do this. Well, I'm just going to go for this. We do want to do this, but we want to focus in on breakouts that fit our class too. And it's very interesting what you'll find in here. But I'm just going to go a 0.7. Now, out of the S&P 500, how many do we have? 137. That's not a ton. That's all. Most of the companies are more volatile, like, they kind of fall in the category of the market, being volatile. 137 over 500. So about 27% of these are actually, you might fall into the realm of lower beta, right? Now, I've talked about this concept before, but we need to make it fit with our swing trades. That's the key, is that it fits with the swing trades for this class over that short-term time frame. So what I'm going to do is we're just simply going to go over here now that we've scanned for this, and we're going to just add to this scan, and we're going to say down here under our study, we want to find, specifically what is within this group that has that beta, but that also has these price patterns that are setting up for flags or inverted head and shoulders patterns. Or in this case, we can look at breakouts. Now I can add this to a flag as well, but let's do this first. So I'm going to go over here. Remember, I just went into add filter and then I went into the study. It will default here. This is such a simple one that you can all build just right with me right now. And we'll delete the very first one that comes up and just make this so straightforward. In fact, I'm going to go over here right now and just say that price, the closing price, has crossed above. So it's going to be crossing above a study. And this study we're going to use is a price, just do price C. Price, type in price C for price channel. Now we're not looking at the lower band, although we could actually use a high volatility scan and look for companies that are breaking down, kind of like that Goldman was, or, you know, Meta at different points. And that would help us on the other side. Just to say, if things break below the 200-day moving average, we might be doing something like this next week. But for now, we're bouncing off above it. We'll see what happens, but we're going to choose that lower, or excuse me, the upper band. I'm going to highlight this here before I scan it too. I'm just saying over the last 20 days, 20 bars. But I'm sorry, over the last 5 bars, we broke above a 20 period high. Now, I'm going to save this right now, and it's good to go, and we're ready to rock. Okay, I'm going to click on scan here in just a second, but before I do that, let's just go in and I'll highlight this for you right now. So if I'm looking at a company, because this is one of these that did show up, it's kind of a flag that is breaking out, but it does have this lower, well, I mean, look at this. This is almost half, almost approximately half the market beta of 1. Think about slow and steady. Do you guys think that a company like this, just off the top, is this a little bit easier maybe on some of these moves? I mean, is that a little bit more stable and steady? Now, that was a bigger day right there, but you were already looking for a pullback, right? How about on the upside? Do you get anything just crazy reversals? Not nearly as frequent when it's trending. Okay, this just happens to be one of them. But side note, let's take off the 200-day for now. And we're going to go ahead and put on the price channel so you can actually see it. There it is, price C. And we'll add it in over here. And I'm going to go back here. I'm going to take the lower band off. There's an upper and a lower. I'm going to do this. I'm going to do a 5. Make it nice and, well, 4 is fine. We'll do a blue with a dotted line, and that should do it. So there you go. When are we breaking? This is a dynamic indicator, also known as like a Donchian channel. You might have heard that before. I'm just going to switch to blue as I'm explaining this here. But a Donchian channel. So, but this is known as we just call it here a price channel. It does effectively, folks, the same thing. It is looking at whatever time frame we've got on our chart here. If it's 20, it dynamically adjusts to the last 20-day high. Do you see that? Right there. Now we're scanning for this now. We can see it, but we're scanning for it. This is a scan. So that would be a breakout. I'll just do breakout above 20 days, a 20-day high. What was that 20-day high? Within the last 20 days, it was right there. Now we could adjust this to 30, 40, 50, or whatever we want, but you can see it does this, but we want to see it breaking out with that low beta for current market conditions. So let's scan it right now, and we'll see how many we get now over the last 5 days. We get 19 companies, and it gives us a sense of what has been moving over this time frame that is low. Now, I will tell you this, because I first started my investigation into this a couple of weeks ago, approximately 2 weeks ago, and what I was seeing were a fair amount of, no, it's actually maybe 3 weeks ago, some of the staples, because they tend to have low beta. Notice I have put the beta in here as well. This is tuned in though for swing type trading on these breakouts. And we're gonna go ahead and do a couple of examples here as we set this up. Just want to make sure everybody's on the same page with us. Remember, we're just building this in that system right there. Yeah, hey Scott, we're trying to reduce the Pepto-Bismol time on something like this, right? Lower betas help to facilitate, yeah, lower, exactly. You were probably making that comment around the Goldman, right? The Goldman setup there. But yeah, I mean, just those could be so fast. But at least we have one way of tapping into it, because volatility is volatility. The VIX is telling us. I mean, we looked at the NASDAQ, at least yesterday's, and it was really quite high too. It was up there. But we're trying to, you only got 10. Interesting. Sharon got 10. Did you get the beta over here, Sharon? Within the 5 bars, upper channel. Let's just review that again. I want to make sure everybody's on the same page. She did it fairly quick with us, though. She got it done. Yeah, so crosses, I'm sorry. It's not just grid, it's got to be crossing above that. I did within the last 5 bars, because sometimes you get a breakout, it'll come back down and it'll rest, because we're actually looking at a 20-day breakout, something like this. The key thing is it's structured to current market conditions. So let's take a look at it. So double check that. It might have something to do. I'm using a demo account, but it's got some of the same features as, let's say, a live account. So it's a little bit different, these demo accounts, so we can tap into those other features. But let me know how that turns out. If you come over here, let's just do this then. Yeah. Now I'm building this specifically just so you guys have it. But I want to get in the habit remember, think scripts aren't guaranteed for timeliness or accuracy either, just as a quick note, just to be mindful of that. But I'm just simply going in here and building it. So that way you guys can set it up, but it should be exactly the same. Just double check those features. Now look over here with me. ADM, agriculture. Where are we talking? Everything, folks, sub 0.70. Traditionally low. ConocoPhillips 0.29. That's low. I didn't know it was that low. Okay, lower than a third. You got Occidental as well. But tracking these with breakouts, sometimes what traders are looking for is this. Just that steady kind of move. Will it always happen? No. But sometimes the low betas, they kind of be as steady as she goes. Now that could be upside. That can be conversely downside as well. You got Kroger in here too. Let's take a look at some of these right now to see what we've got, okay? Now some of them did start early, like CF. God, that's been for a while now. Yeah. But this was kind of slow and steady. Look how many breakout signals that one got. KR is in here. I looked at that one actually last Friday too, as we were breaking out. This is kind of a longer term breakout. Do you see that over here? Post earnings as well. Notice over here with me. See this? See this? This is what I'm talking about right there. Stay a little bit more slow, even in high VIX type scenarios. I mean, that's what we're looking for. I saw some utilities too can really be, yeah. I mean, let's see. We already looked at Fang, but Edison, yeah, Edison's in there. Con Edison. There you go. See the breakout? Now, looking at this, let's go ahead and take a look and see what we've got just in the past 1 year. I'm looking over here. I'm going to take this off for now just so we can see the charts a little bit better, but you guys are getting the idea. We're getting that scan to show us, yeah, right there, when we're breaking out above a range. The next thing I'm doing is I'm saying, okay, I'll kill this first. Hang on. Let me just take this off because I want you to see it. Where is the price pattern? What else are we seeing over here? Well, there was a long-term resistance level over there. We broke that. That's all else equal. It could mean a longer-term breakout. It kind of is like, do we have some people in here that do follow the cup and handle pattern? I know that because you guys always bring it up when I'm writing these, but that's a cup and handle. I mean, and it did break out. So some traders might say, yes, Mike, that's a longer-term cup and handle. You've got the saucer type bottom, or also known as the rounded bottom. And the last portion of this right there is the what? The swing trade potential flag. Indications of it? Yeah, perhaps. Now, we know something about utilities as well, is that utilities are in high demand. because of AI. We don't know specifically. You'd have to look into the details on each one, but the AI build out is going to require a lot of energy, for example. So that's something to keep an eye on. I mentioned this previously, but yeah, an AI search requires approximately 10 times the energy of, let's say, just a standard old Google search, 10 times on each search. And that's been that way for a long time. I mean, AI, and a lot of those AI searches, I think, are a lot more than 10. So people ask all kinds of things, but there you go. But see the flag. This could be a flag pattern and low beta, but look at the pullbacks. Fairly, I mean, not as crazy, but that's what we're trying to get to. Could it happen? Sure. But we're just trying to line things up. So we're putting ourselves perhaps in the best position so that we don't really get knocked out of the trade too much here. So if that's a big trade unfolding, some traders would, already hit our T1 target, but they could come over here and say, well, yeah, there's quite a bit of room left on something like this. For example, if I'm here and it goes up and we pull back, well, that could be roughly, I'm just eyeballing it, that's our target over here. This price range over here is comparable perhaps to the price range accepted. Now we've already taken maybe a third of that, or close to even more than a third out of that move, but this is designed to find that for us. These searches really scan through a lot. I mean, we're only getting 19. That's over the last 5 days. There are some that are breaking out today, and we can look at those too by just coming in here, folks, and just adjusting this down to 1 bar. If I did just 1 bar, those are today breakouts above the 20-day or above the 30 or above the 40, whatever we wanted to adjust that to. All I'd simply do is come over here, scoot on down within our scan, within the scan tab into Stock Hacker, and just flip that to a 1 if I wanted to. Okay. I'm going to go 3, for example. We'll get some that within the last 3 days. Although, as I've said, if you go 5 days, you can still catch a breakout, and then it comes back down and rests on prior highs, if that makes sense. Okay. All right. So just 3, for example. Let me just show you this. So just do a quick adjustment. Here's 3 right there. Boom. So here's 3, and I'm going to scan it a lot less. A lot less companies come up. Now, over the last, you could say this, over the last 3 days, we saw more breakouts in here, not in the Krogers, not in some of those areas, but more in this area. I mean, it was just a while back. I was seeing Johnson & Johnson in here as well. But here's APA. Let's look at APA and DVN. Okay. APA. Excuse me. There's the breakouts there. Do you see the smaller, kind of a little bit more steady, stable pullbacks? This is within, not 64 points, folks. Of course, it's not a higher price stock. Yeah, 64 points would put this below 0. It's not going to work here as that Goldman example. But I'm just saying, hey, percentage-wise, a lot smaller. And look at this, just a 2-3 day pullback, 2-3 day pullback, and it's going. Now, it is hindsight, but we are still breaking out, and we're seeing companies that are doing that. Now, why is this coming up? Because we are still hitting that 20-day new high here and here. It is the highest high over the last 20 days. So you're getting the continuation of breakouts, but this could be one, is kind of a watch list one to keep an eye on. The one just below it was DVN or Devon. Okay, and this is one we actually have a trade on. I know we were looking at some of the utilities last week, but there you go. So this was our example trade from last week, and it still is doing what? It's kind of doing what we had sort of anticipated it doing. But here is that breakout right here off this. There's the pullback, very, very mild compared to what we were looking at before. Lower beta for sure. I mean, beta was what? 0.64, clearly below the 0.7. Just a little bit above the 50% of what the normal market move is, but still a lot less than the market itself. In terms of money flow, it appears that this particular trade that we looked at last week got a lot of buy-in over here, and the stability of the trend could have been attractive. But sometimes you'll get these breakouts that are occurring when there is some fundamental catalyst or driver out there. In this case, AI spending has gone really crazy. But now the issue is the energy to keep it going. You got to have energy to keep that AI running. It's energy intensive, and a lot of those do center around oil and energy. But by the way, this is also we know what's going on with energy here. Here's just a look at CL. This has been up for a while, and we don't know if it's going to be elevated for quite some time too. So there can be additional drivers out there to be mindful of. Now, this trade right here is fairly, steady as she goes in terms of the one we did. But back over here, there are going to be others that fall into other areas. For example, EXC and CNP. I want to take a look at COP too. That's the lowest beta that we had out of all of them. There you go. Okay, so going forward, could be interesting watch list stocks just to place on a watch list, for example, for these paper trades that we're looking at. We're just looking at the pullbacks and saying, hey, if we ran up here, we pulled back. These can, keep going as long as the trend is up. And we're just looking at that. Here's CNP right now. And there you go. We just broke above that high. And the other one was EXC. There, another one. Flag pattern, breakout. Right there. Okay, right there, we broke out above that high. So this one is actually within the last 3 days. I think if we took it to 2 days on our scan, it would have been knocked out of our trade. We wouldn't even have seen it. Oh, good. Okay, Sharon's got her 19 now. Perfect. All right, so there you go. But I'm going to go back and do this. I want to see just a different basket of companies in here. If we were to go into the scan, I don't know how many, but this is an interesting one too. I'm going to go over here. The NASDAQ was really quite high, right? We could change this. Watch this. If I just say what's less than the NASDAQ, I'm just going to say it's just less than the NASDAQ. It's a 0.9. I am going to look in the NASDAQ 100 as an example, right up here. One more. There we go, at the very bottom. And let's just see what we've got over this time frame. We've got 26 companies. Notice that even, okay, here you go. So you got basically the same oil companies. There are these two that are in the NASDAQ 100, and they are coming up too, but the same group. And by the way, their betas are in the 50 range. So we're still just getting that group, but at least it's isolating here for us what companies are those low vol that could fit into those potential breakouts. Okay, with that, let's go back. I'm going to go back over here. And I'm going to go and just flip this down to a 5 again. We're going to end this with a trade here, a paper trade. And I'm going to go into our S&P 500. And there we go. Okay, so tons of companies to look at in here. Now, as I go through here, let's look at this last one, and then we'll do a trade here. Okay, so let's see. It's OX. This was one of the biggest movers in the market over the past couple of weeks. Yeah, if we look at, actually last week, I think it was maybe the biggest. It was, in fact, I did look at this. It was the biggest mover. Now, these are the consolidation range, and this is the move to the upside. But you could see, we were really kind of slow and steady over here, broke out and ran again with a series of these flag type patterns. That's what we're getting from this search as we go through it here. Okay, so here is one right here as well. First Energy. Many of these look quite similar. Okay, there's the breakout right there as we're setting this up. All right. Now, on a trade like this, there are a couple of different things we could do. Now, we just broke out. We might come back down and rest in this particular range. Actually, what I'm going to do on this, I will, in this case, go to a 30-minute chart. I just want to see what this pullback looks like. Going to these 30-minute charts is helpful because then you can actually break down even the minor sort of flag patterns that you're seeing here. Some of these, I mean, this is kind of a smaller, shorter run over here, but look over here with me. Some of these pullbacks that were actually sideways had some pretty good follow through in terms of price action. There's a breakout right there. Now remember, we're just looking at this short term, and this kind of houses all that data that we're looking at on the daily chart. We're just we're making it more minute so we can actually see some of these moves breaking out here, or setting up, I should say, in this case. It's not really breaking out, but I'm going to do this. I'm going to elect to do this instead because we're just kind of pulling back here, and I want to see a little bit of a follow through because notice we're just barely touching kind of like support over here. Is this example? I think there's plenty of these. And by the way, if we run this tomorrow, which I want to do because I just want to see, what new lower beta stocks could be breaking out. I want to just check and see, each day while we're under these conditions, what might be setting up. But for now, what I'm going to do is elect to go like this. I'm watching this, and I'm just watching for maybe a breakout. Let's see, above a range over here. In fact, I'm just going to right click, create an alert for now, and I'm just going to say higher question mark right there. Click on create. And oh gosh, one last thing I want to show you guys every time when I do this. But yeah, if you go down here, if you want that to be obviously texted to you, you've got to go under here under notify with, click down here under, and make at the bottom, and just make sure you've got it sent to your mobile device. And again, to set that up, go to setup up top, application settings, and then under notifications, you can get your email on there, your cell phone, of course, and have that in place. But a quick note on alerts. Now, I haven't had any issues with alerts myself. I've been able to get these coming through, but I just had to state this because alerts aren't guaranteed to be delivered at a specific speed or time frame, and should not be used as a replacement for actively being aware of your position. So park that in the back of your mind. And folks, this is an interesting way to watch these as they're, potentially setting up on many of these trades. And, will these trends continue? But the one thing that is done, the search has helped us, the scan has helped us to find potential breakouts. Like say, for example, right there, we would have got one over here too. So this might not be an ideal setup for, some of you that are looking at this, but, perhaps if you're looking at that bull flag, say, for example, like this, and that's our flag. Now we're just kind of watching this over here for the possibility of a break to the upside, because this is a little bit different. This one here is this is a utility company. Yeah, utility. And again, when you run the scan, if you put this column in here, then you can look for all of the companies that come up. You know exactly where their betas are at. But, basically they're below 70. I did change that to 0.9. I forgot to change it back. We had a few slip underneath the cracks. BG, agricultural products, came in at 0.75. It's less than the market. And Phillips, 66. So EQT, I'm just going to show you this last one so we could just see this one that popped up. There you go. Okay. Breaking above what? Well, longer term highs, maybe in a position for some of these little swing trades coming up with, folks. Today's discussion was on that low volatility that we can try to control, at least those companies with the lower beta. So really lower beta breakouts in current market conditions. And with that, folks, be sure and give us a follow over here on Trader Talks channel. Got it right there. Just Trader Talks. And of course, you got the playlists and others in here. Ben's got some great stuff, folks. If you're getting value from this presentation that we discussed today, do me a favor, just smash that like button. It just lets us know that you were able to get info out of this and you found it valuable for you if you did. And with that, hey, Ben, thanks so much for your help in the chat as always. And to everybody, have a fantastic rest of the day. Looking for future discussions.